Hey everybody, it's Brian Shannon from alphatrends.net. Today is Friday, the 21st of June, and the markets here this week were pretty much up. The semis were actually down. That should be red, but for the most part, we were positive, and you can see these numbers here are for the year to date. For instance, Ethereum's up 60% off of its year to date low, and the S&P 500 is just 1% below the high of this year and all time. So let's take a look at these charts. We're still in a primary uptrend, obviously. You could draw a trend line if you wanted that looks like that, and perhaps that will be something that's tested in the future. But for now, we're still in a primary uptrend above a rising 20, 50, and 200-day moving average. On the intermediate term time frame, the 30-minute time frame over here, each one of these bars is 30 minutes, you can see that we are maybe starting to just distribute a little bit up here. We do have this little short-term support level broken, so that pattern of higher highs and higher lows has been broken for now on the short-term time frame, and we saw the anchor from this gap kind of holding for today. The 5-day moving average is still rising, but I think next week, going into the first couple days of the week, that we're going to be just pretty cautious overall on this market. We've come pretty far pretty quickly in all these markets. NASDAQ is right on the anchor from that gap right there and below the week-to-date volume-weighted average price. I think, breaking below today's low and holding below it would likely lead to a move down towards this level, and that is at about 473 or so. And that's kind of the same route of where this 20-day moving average will be in a couple of days. So, I'd just say ask, where has it come from? It just came from 443 up to 486 rather. So a 10% move seems as though it's reasonable to expect some kind of pullback, or at least a time correction, something that turns sideways. I wouldn't be surprised or bothered if it did start to pull back here a little bit. Things are getting a little bit ahead of themselves. Not true that is in the Russell 2000, which I'll just say continues to be a waste of time. I see nothing here on the daily or the intermediate term time frame that suggests that there's a low risk, high probability trade setup. So let's just stop talking about that. Semiconductors, as noted, were down about a little over 1% on the week, and no real damage done, obviously, to the uptrend. We're still in a powerful move higher here, well above that rising 20 and 50-day moving average. And the magnitude of this rally has really been remarkable. So some consolidation pullback is appropriate here. We don't get bearish on a move below the 5-day moving average. We get cautious. Just as we didn't get bearish over here, we got cautious on that break below the 5-day moving average, and we're cautious once again. That doesn't mean it might not be in for a little bit deeper pullback, maybe down to here. And if that doesn't hold, then we'll look for other levels. This is what I do for subscribers to Alpha Trends every single day, is point out these levels. But now that we've shown a little bit of a pattern of lower highs and lower lows on the intermediate term, and we're below the 5-day moving average, it just says take your foot off the gas a little bit here, maybe tap the brakes a little bit. As I always like to say, it only ends badly if you don't have a plan to exit. If you don't have a plan of exit and it just starts caving in, well, you can't sell down there. That's just stupid. Have a plan in advance. Obviously, the semiconductors were driven largely by NVIDIA. NVIDIA had what is called an outside day yesterday, reversal. And the last time we saw that happen, it kind of led to sideways to lower for NVIDIA for the next couple months. So I think you've just got to be a little bit cautious with NVIDIA here today, in early next week. We're below a declining 5-day moving average, and we haven't had that happen for a while. So maybe we're in for a little bit deeper pullback. I'm not looking to get short this stock. It's much too powerful for that. And I'd say just, if you're a trader, know where your exit is. Maybe scalp on the short side, but the longer term trend just isn't worth fighting in any trend. Biotechs are starting to maybe come back here a little bit. What I'd really like to see happen in here is that they pull back a little bit, and early next week maybe they can get going. They made an interesting move off the open today, which was they gapped above the declining 5-day moving average, and then they got back above the daily volume weighted average price. So let's look at that on a 2-minute time frame. And this was exactly, I talk about this often on Twitter and on Alpha Trends. That was the low risk purchase with a stop under here, and that was good for a day trade. That's all I took it for. I'm not interested in holding it with a declining 5-day moving average. I'd like to see it pull back early next week, make a higher low, and then look to get long for the possibility of a swing trade here. We're still fighting with the year-to-date anchor. That's this one right here, any anchor off of that high. So when we look at it, though, in the context of the bigger time frame, we're still holding above this prior band of resistance, and we've got that 20, 30, and 42-week moving average still rising. So it is set for a bigger run. Let's see if it can do what we want it to do, which is, again, to carve out a higher low, and then not to buy the pullback, but as it starts to rise again, to buy over here and then maybe set a stop underneath this low or underneath this low, or maybe half of it underneath this low and half under there. Make the trade your own for your time frame. I'm a swing trader. Financial stocks never pulled back to the year-to-date anchor. Instead, they got a bounce in here. I'd like to see them maybe break beyond this range and then pull back in. I certainly wouldn't be a buyer in there. And in fact, I don't like to trade the financial stocks, so I don't really see much advantage being involved there. Energy names still have that same pattern intact. It's very clear here. We have these lower highs and lower lows, and this is, until proven otherwise, a lower high, unless we can carve out a higher low. If we get a higher low and then take that out, well, then maybe it's set for a move up towards the 50-day moving average and the anchor off that peak. But if they didn't scare you out, they often wear you out. I don't really see any opportunity in the energy names besides what is really just now a counter trend bounce. This bounce, this bounce, this one, and this one. There's no reason to think that any of these are a reversal, not while we have a declining 20 and 50-day moving average. Gold and silver, started to try to get going on Thursday, but pulled back. They're still holding above the anchor from this level. GDX is one that, if you're a gold trader, it still has that pattern of lower highs and lower lows. So still, again, no hurry in these things. Some of the stocks that might make sense to keep an eye on next week, this TGTX, I had mentioned it a couple times, and Tuesday on Trader TV, and then on Twitter yesterday at 17:02, and this has a big short position in it. I've sold some. I've also actually bought some back this afternoon, right before the close. Right here is it actually hit the 2-day anchored volume weighted average price. I'll show you that. Right as it was here, I bought back some of what I sold up in this area. I actually sold some in here and in here, so I bought some back at that level. That's just risk management. But TGTX, it has a big short position. It has a profitable drug, something to keep an eye on. AMD, we were talking about this one hopefully being a shakeout below the anchor from this low back here in October of last year. And it's looking like that is a fake out right there, because from this failed move lower came this fast move higher. Now, I'm not ready to buy it aggressively yet because we're still below the declining 50-day moving average, or the 50-day moving average is declining. However, on Monday and Tuesday of next week, as we get rid of this data, that means that 50-day moving average, let's say the stock rallies, well, then we'll be replacing it with higher data, this with higher data, meaning that 50-day moving average will be rising. So it's getting ready to perhaps go up and assault this anchor from the year to date. That's this line right here, and from the high of this year, maybe rally up towards that level, create a higher low, and then perhaps AMD can start to make some ground back up that it lost here after that initial early strong start to the year in AMD. So keep an eye on that one. Tesla kind of in the same boat. Let's see, where's my Tesla? I'll just type it in because I can't see it on my list. TSLA. Kind of same story. We saw a failed move lower right here as it broke below the prior anchor low, and that sucked in short sellers. It hit stops, and from that failed move came a fast move higher. We're still digesting that, but as you can see here, the range is getting a little bit tighter. This is the anchored volume weighted average price from the beginning of the week. We're starting to see it settle down a little bit, and on here on the daily time frame, we're seeing this range tightening in here underneath still this year-to-date anchor and the anchor off of the high that it made in December. So if it can get going, keep in mind though, we still have a declining 200-day moving average. So I'm not looking for a major turnaround in the stock, but certainly it seems like a couple of these levels might be able to get hit if we were to do something like this, maybe rally up towards this level, break that a little bit, pull back, and then run up towards that 200-day moving average. So keep an eye on Tesla as far as a potential trade scenario. PANW could be getting ready to going as well. This one, it's been trading in a pretty tight range. Also, this is what I've been outlining for subscribers that I wanted to see happen, which was this range seemed a little bit too tight. I wanted to see a shakeout. We got that shakeout. Now we're up against this little band of resistance. We expended a little bit too much energy getting there, so I'd like to see Monday it pulls back, makes a higher low in here. Then you could call this maybe an inverted head and shoulders pattern, and then to buy strength either here or here with a stop just underneath this low. So PANW is definitely looking like it's wants to maybe continue to move higher here. Let's see what else. How about Hewlett Packard, HPQ? This one's holding on to its gains well. Keep an eye on that one. It's a tight range. I always lay these out for subscribers in detail each day with multiple time frames. AHCO is one that's kind of got my eye as well. Here's a longer term weekly chart. These guys are supposed to earn $1 or so next year, and there's a pretty good little short position. Nothing special, but you can see here I was looking for a shakeout and then maybe get going. So keep an eye on that one. And I almost forgot about Bitcoin, as I often do. If I don't talk about it early, I often forget about them. So I was mentioning today on Twitter about how the IBIT, which is the largest of the ETFs, when they came public back in January, the anchored volume weighted average price is right here. And today we touched on that anchored VWAP, and so far seems to be holding. Now, we still have a declining 5-day moving average, so I'm not interested in buying it. But when we look at Bitcoin itself, let's take a look here at Bitcoin. You can see that there's nothing really here supporting the case that it should make a low in here. So I wouldn't be in a hurry to buy that IBIT is my point. I think it's more likely that we continue to drift lower down to the anchored VWAP from the year-to-date low. That's that green line. That would bring us down to about 62,000. And if that were to fail to hold, then the anchor from the beginning of the year is 59. I don't think we'll get that, but right now I just don't think there's a hurry to get involved, especially when you consider that we are below the declining 5-day moving average right here, and that 62,000 seems like the level. What's interesting is Ethereum holds up a little bit better here, and you can see that it's been holding the anchor from the year-to-date high. That's that red line. It's also holding this green 50-day moving average. So this is, we've got this prior little support over here at about 3,700. It's going to need to get back above that to become more neutral. I think it's maybe neutral in here, but I'm not in a hurry to get involved. And I'm especially not in a hurry to get involved in Solana. It's not holding any of the levels from the anchored VWAPs. So just keep that in mind. Ethereum probably looks the best right now, followed by Bitcoin, which I'm not thrilled about, and then Solana.